Hello everyone. Today we'll be talking about Chapter 2, Fundamentals of Partnership. The subtopics to be covered in this video are the preparation of profit and loss appropriation account and partners capital account on the basis of an example. Let's first talk about the format of profit and loss appropriation account. Although I have explained the format in detail in my previous video, but we will just recapitulate it. So this is the format of profit and loss appropriation account. On the credit side, we have the profit transferred from profit and loss account and the income, that is interest on drawings. On the debit side, we have the various appropriations such as interest on capital, partners' salaries, partners' commission, transfer to reserve, and finally, the balancing figure is the divisible profit that would be divided between the partners. Let's have a look at the format of partners capital account. Before we look at the format, please remember that there are two methods of preparing partners capital account: fixed method and fluctuating method. According to the fluctuating capital method, only one account, that is partners capital account, is prepared and all the adjustments, all the appropriations are shown in the partners capital account. The partners capital account can either have a debit or a credit balance. All the additional capital or the drawings out of capital or the drawings out of profit are shown here. In addition, all other appropriations such as interest on capital, salary, commission, any profit, any loss are all shown in one capital account under fluctuating capital method. Either debit or credit balance would appear when you balance the partner's capital account. In case of fixed method, we maintain two accounts: partner's capital account, which remains fixed and changes only in case of additional capital or drawings out of capital, and we also prepare partner's current account, in which all other appropriations, all other adjustments are shown. Again, the partner's current account can either have a debit or a credit balance. Now let's take an example. Saial and Kajal are partners sharing profit and losses in the ratio of 2:1. On 1st April 2019, their capitals were Saial 5 lakh and Kajal 4 lakh. Prepare profit and loss appropriation account and partners capital account at the end of the year from the following information. First, interest on capital is to be allowed at 5% per annum. Now the capital which is given to you is on 1st April 2019. So that means this is the opening capital. Interest on capital is always calculated on opening capital. So directly you will calculate 5% of 5 lakh and 4 lakh respectively. Interest on loan advanced by Kajal for the whole year, the amount of loan being 3 lakh. Now if you notice, the interest on loan percentage is not given in the question. But according to the provisions of Indian Partnership Act 1932, interest on loan is to be provided at the rate of 6%. So 6% of 3 lakh would be the interest on loan which is to be given to Kajal. Next, we have interest on partners' drawings at the rate of 6% per annum. The drawings have been given as 1 lakh and 80,000 respectively for Saial and Kajal. Now, if you notice, the date of drawings are not given in the question. When the date is not given, the average period is fixed, that is 6 months. Next adjustment, 10% of the divisible profit is to be transferred to general reserve. Divisible profit is the profit which is left, or the residual profit after you prepare or after you put all the adjustments in the profit and loss appropriation account. Profit before giving effect to the above for the year ended 31st March 2020 is 7,02,600. Now let's have a look at the working notes. Working note number 1 relates to the interest on loan by Kajal. The loan amount was 3 lakh. The percentage of interest we've taken as 6%. So the amount of interest on loan is 18,000. Please always remember that interest on loan is a charge and it will be shown on the debit side of profit and loss account, and it will be charged at the rate of 6% as per the provisions of Indian Partnership Act 1932. The second working note relates to the interest on capital evaluation. The capital was given in the question as 5 lakh and 4 lakh respectively. Interest on capital was to be provided at the rate of 5%. Therefore, Sajal's interest on capital is 25,000 and Kajal's interest on capital is 20,000. The next working note relates to the calculation of interest on drawings. The drawings of the partners was given. The rate of interest was 6%, and since the date of drawings was not given, therefore the average period is taken to be as 6 months. Therefore, Sajal's interest on drawing is 3,000 and Kajal's interest on drawings is 2,400. The next working note relates to the amount which is to be transferred to reserve. Now, it was given in the question that 10% of the divisible profit is to be transferred to reserve. We need to know what is the divisible profit. The profit given in the question was 7,02,600, from which none of the appropriation or none of the adjustments had been added or subtracted. In our question, we were given adjustments relating to interest on loan, interest on drawings, and interest on capital. Interest on loan is subtracted, interest on drawings being an income is added, and interest on capital again is subtracted. So therefore, our divisible profit is 6,45,000. Out of this 6,45,000, 10% is transferred to reserve. Therefore, the reserve amount is 64,500. The next working note relates to the profit sharing evaluation. The profit which we get from the profit and loss appropriation account after making all the appropriations and even subtracting the reserve amount is 5,80,500, which is divided in the ratio of 2:1, resulting into the profit share of Sajal and Kajal. Let's have a look at how our profit and loss account would show. In the profit and loss account, the profit that was given in the question has been transferred. Now you all must be wondering that in our question we were not asked to prepare profit and loss account, but we were given a charge in the question, that is interest on loan. So therefore, interest on loan being a charge should be shown in the profit and loss account. So after we subtract the interest on loan 18,000 from 7,02,600, we get the profit which is to be transferred to profit and loss appropriation account, that is 6,84,600. Look at the profit and loss appropriation account. On the credit side, the profit has been transferred from the profit and loss account as 6,84,600. Interest on drawings as we calculated has been shown on the credit side since it is an income. Interest on capital and reserve have been shown on the debit side since both of these are appropriations. And finally, the balancing figure, the divisible profit, has been divided between Sajal and Kajal in their profit sharing ratio. Now we also need to prepare the partners' capital account from our profit and loss appropriation account. Now look at the profit and loss appropriation account. The various things which are mentioned in the P&L appropriation account will be transferred to partners' capital account. First of all, the interest on capital, which is mentioned on the debit side of P&L appropriation account, is transferred on the credit side of partners' capital account. The interest on drawings is transferred on the debit side of partners' capital account. The profit which appears on the debit side of P&L appropriation account is transferred to the credit side of partners' capital account. So basically you are transferring it to the opposite side. If it appears on the debit side, you are transferring on the credit side, and if an appropriation appears on the credit side, you are transferring it on the debit side. So this is how your partners' capital account finally would be shown. The opening balance was given in the question 5 lakh 4 lakh. Interest on capital has been transferred from P&L appropriation account, and the profit also has been transferred from P&L appropriation account. On the debit side, the drawings were given in the question, and interest on drawings has been transferred from the credit side of P&L appropriation account, thereby resulting into the balance, that is 8,09,000 and 5,31,100. I hope the concepts are clear to you. In this video, we have discussed about the preparation of profit and loss appropriation account as well as partners capital account. Thank you so much for listening to me. If you liked my content, please show some love and support by liking my video and subscribing to my channel, Inside Accountancy by Shakun. It will really motivate me to upload more content.